Bitcoin has been attracting a lot of attention from new investors and traders. A lot of investors have flooded into the market in anticipation of making some money off these moves in Bitcoin. I'm creating this video so that you don't make some common mistakes and lose your hard-earned money if you're new to trading or investing in Bitcoin or cryptocurrencies. We'll discuss the story of Ali Abdaal, who is a very popular YouTuber. He makes videos about productivity and his channel is all about helping people lead healthier, happier and better lives. He's actually a doctor who is graduated from the Cambridge University, so he's a very smart guy. But the most intelligent and smartest of people can also lose money in the market if they don't have a plan. And it can be any market. It can be a stock market where stocks are traded. It can be a bond market where bonds are traded. It can be a forex market where currencies are traded. Commodities market where you have wheat, oil, sugar, cotton, or in Ali Abdaal's case, it was the cryptocurrency market where we have Bitcoin, Ethereum, Dogecoin, Shiba Inu and many others. So about 4 months ago, Ali Abdaal shared a video on his YouTube channel about how he lost a lot of money in Bitcoin in 2017. Basically what happened was in 2017, the price of Bitcoin went from $1,000 to $20,000 and it came crashing down to around $3,000 by the end of 2018. So Ali Abdaal was caught in that whole run up and then the run down. He had invested around $88,000, which was most of his life savings, and he lost about $56,000, which is huge for a lot of people, and it was huge for him. He had saved and built up that money for about 5 years through side hustles while he was studying in Cambridge Medical School. He lost all of it within a few months and it set him back financially by a few years. He wanted to buy a house. He had so many plans which got destroyed because of that Bitcoin crash, and we should learn from it. So right now, Bitcoin and cryptocurrencies are being hyped up a lot in social media. You can check Instagram, you can check Facebook, you can check YouTube. There are lots of channels, lots of posts about Bitcoin, cryptocurrencies. It's going crazy, and many people are going to jump in hopes of making a lot of money, in hopes of becoming millionaires. If they are not smart about it, they are going to lose a lot of money, like how Ali Abdaal did. I believe that we should always learn from our mistakes, but it is even better if we can learn from others' mistakes. There are a lot of lessons that we can take out from Ali Abdaal's experience. Number one is understanding yourself, understanding your risk profile or risk tolerance. Now, everyone is built differently. I am built differently. You are built differently. Everyone is in a different stage of their lives. Some people are young, some people are old, some people are more risk averse, some people like taking risks. So you have to understand who you truly are before you invest in the market, because this market can be a roller coaster. Some people are comfortable with taking more risks. Some people do not like taking risks at all, and you have to understand where you stand in that whole spectrum. There are people who are close to retirement who cannot afford to take big risks because their whole life earnings might go down the drain. And there are some youngsters who can afford to take risks, who don't have a lot of responsibilities. So everyone is in a different stage of their lives, and you have to understand how much risk are you willing to take. The second lesson that we should take away from Ali Abdaal's experience is that we should understand the time frame of our investment or the trade. Now, there's a difference between investing and trading. Not a lot of people know about it, but trading is more short term. It can be from seconds to a few months, maybe 3 to 6 months, maybe that can be called a trade. And investing is maybe more than 6 months to many years. So trading is short term, investing is long term. You have to understand, are you an investor or a trader? If you are an investor, if you think that Bitcoin is going to go high, if it's going to go up a lot from here, you don't care about the small movements that it makes daily, or you don't care about any crash that happens in the near term, then you're good. You don't have to worry about anything. You just buy, you hold, you come back after a few years and you check your portfolio. If you are a trader, you have to understand what's your time frame. Are you in it for a few days, few months? Are you trying to time the market, which is very tough, but a lot of people do it. Basically, you have to understand what your time frame is. So there are some long-term investors and there are short-term traders. You have to understand where you stand in that spectrum as well. The third lesson is that we should know if we want that money anytime soon. In Ali Abdaal's case, he wanted to buy a house in a few months, but that dream got washed away because Bitcoin crashed and he couldn't buy his house. We should not put in more money than we can afford to lose. If we have some near-term commitments like buying a house, you have to pay for your child's education, maybe it's for your own education, it can be health, medical bills, it can be anything. If you need that money, then you should not put it into Bitcoin. You should not speculate. You should basically have a plan, right? If you need that money in the near term, then you should not put in more than you can afford to lose, and you should be more responsible with your money. So we need to understand that Ali Abdaal sold his Bitcoin for a loss. He didn't have the conviction to hold it long term. He was more of a trader than an investor. If he would have held his Bitcoin all the way from 2018 till now, he would have been in profit, right? And this is also because he needed his money. He needed the money to buy a house. He needed the money for his own expenses. It ties back to the two lessons that we learned before. You should understand if you're a trader or an investor, and you should know if you need the money in the near term future. So he could not afford to lose that money. He had to sell it for a loss and take the money out. The fourth lesson is that many traders chase quick gains, and to do that they use leverage. For those of you who don't know what leverage is, let me explain with an example. Let's take an example of buying a house. You may want to buy a property that is worth $100,000. So you go to the bank to take out a loan, and the bank asks you to pay 10%, which is $10,000 as the down payment. Therefore, for $10,000, you become the owner of a $100,000 house. And just imagine that within a year, the property market appreciates by 50% and the house becomes worth $150,000. You decide to sell the property for $150,000, therefore making you a profit of $50,000, which is $150,000 minus $100,000. Now just imagine that you hadn't taken a loan, you just use your $10,000 to buy a small apartment, and that apartment appreciates by 50% within a year. You just made $5,000 because the $10,000 apartment became a $15,000 apartment. If you sell it at 15 minus 10 is 5, you made $5,000. Whereas in the previous example, you made $50,000 with the same amount of money. This was an example of leverage. Basically, in terms of trading, it just means to trade with more capital than you already have. It means entering the positions in the market which are many multiples of what you're putting down as collateral, which is also called a margin. And it is measured as the percentage of amount that you can trade with. For example, if the margin is 20%, it means that you have a leverage of 5 times. If the margin is 10%, then you have a leverage of 10 times. And because of this leverage, the gains and losses are magnified. And this is what makes leverage so lucrative or deadly, depending on what side of the trade you end up with. Many people blow up their whole life savings and blow up their whole accounts by using leverage if they don't know what they're doing. So if you're a new trader or an investor, I think that you should just stay away from leverage because it can just blow away your accounts, it can blow up your accounts, and you don't want that. If you're experienced, then you might just dip your toes in it. And the last lesson is that you should never trade or invest with the mindset that this can be your income. In fact, most of the professionals at hedge funds and institutions and banks have a basic salary. They just don't make money off their profits. They also have a basic salary. You might think that if they're so good at making money in the markets, why don't they just, live off it? Why don't they just make profits and take that as their salary? But there's a big reason behind it, and the reason is volatility. Traders and portfolio managers and investors are slaves to the volatility. What does volatility mean? It is just the movement in the price of an asset, like the up and down movements. They need that movements to happen to make money off it, right? If the price is sideways for a long period of time, they won't be able to make money because the price needs to go up or down for them to make money off it. So therefore, even the best of best traders have multiple sources of income. They just don't rely on their trading income. The YouTubers or the traders that you see on Instagram or YouTube, they always have another source of income. Trading is not their only source of income, so please keep that in mind. In fact, it's just better to let your trading account grow over time and reap the benefits of compound interest. Warren Buffett, one of the richest people alive, calls compound interest the eighth wonder of the world. He's made all his money through investing for long terms over a period of time. If you see his wealth, it has just compounded year over year and it has been exponential. So these were some of the lessons that you should keep in mind if you're new to crypto market or the stock market, and if you feel like entering the crypto market right now, it can be a wild ride. You need to have some plans in mind. You need to have some plans in place, and if you keep these lessons in mind, I think that you'll be good. You will be able to protect your capital and you'll be able to grow your capital as well. If you have lost or made money in the crypto market or the stock market, please comment down below. Please share your lessons. And if you feel like I have missed any important lessons, please share them with me as well. With that being said, please hit the like button and subscribe to the channel, as I would love to grow a community where we can share ideas together. I have shared the links of some crypto exchanges that I use if you want to sign up and get discounts on the trading fees. Thank you so much for watching this video. Have a great day and I'll see you soon.